All right, good morning, everybody. Can you hear me? You can unmute yourself, let me know, or send me a chat.
We can hear you.
I can hear you.
Excellent. You can see the presentation slides on the screen?
Yes.
Okay, thank you. So, Del or Dana, do you want me to get started? Did you want me to wait a few minutes?
Let's see, Del, what do you think? We've got 1, 2, 3. I know for sure there's at least 2 or 3 other people joining, but since it's going to be recorded, I would say you can get started and then they can catch up since it's 9.
Okay. All right, so let me just find my record. Here we go. Okay, we are now, all right, we are recording. Okay, so good morning, everybody. Welcome to the 2019 SBIR Proposal Workshop. My name is George Moker. I'm the Director of Government Contract Services at Ambrosie Donahue Congdon here in very balmy Newburyport, Massachusetts. So it's cold here, a little different than in your area. Today I'm going to go over a sense of what proposal writing from a financial perspective is all about, and I will give it from the perspective of best practices, things that I've seen over the past 15 years in doing this type of work, in addition to being a former CFO of a government contractor, which is where I got my experience 8 years before that, and just sharing whatever words of wisdom I can help our new potential applicants with as they go through the proposal process. So feel free to go into the chat room with any questions. If you have any questions, you can also interrupt. I'm okay with that. And the goal here is for each of our participants to at least be aware of some of the tricks that go on with government contract proposals. This is actually easier than it seems. It tends to become very scientific when I see some of these proposals. I've seen a lot of them over the years. But my goal is to really demystify how these proposals are done, not only from the proposal standpoint from the government side, but also the fact that our belief is that you're a business first where the government is one of your customers. So we try to have you act like a business, so as you're making decisions, these decisions are management/business type of decisions that you're making. So again, welcome. So what we're going to go through very, very quickly is you've seen a lot of things out there. I'm sure you've all done your individual research to our participants, and the secret sauce to how you put a proposal together is normally there's some type of budget in the SBIR world of what you're going to get in a phase one, depending on the agency you're working with. So if you're working with defense, you might be somewhere between $70,000 and $150,000. It all depends. You might be at 125, depending on the branch that you're working with DoD. And if you're in other agencies, you might be as high as $225,000 with NSF and NIH. But really, the agencies act very similar. They give you different types of dollars in your phase one proposal. And so you want to know that information ahead of time, because the one thing you always want to do when you're putting a proposal together, and you'll hear this if you're working with any technical folks on what should the technical writing be, that you don't want to have disqualifiers. So things that automatically disqualify you before you're even able to make it out of the gates. So you want to understand what the financial program requirements are. And again, this is solely limited to the financial side. I won't get into any of the technical side. Obviously, that's not my skill set. But I will share with you the financial part of it. So what you'll normally see when you do some research on these things, and there's presentations all over the country, is there's this reverse engineering of the budget. And how do you figure out what you're going to do with the breakdown of the amount of money you're going for? So let's say if you're going for $150,000, how do you know what makes up that $150,000 between your direct costs, your indirect costs, and your profit. And what we see out in the field is quite a few different versions of this. One is that companies know what their direct costs are going to be because that's the technical side of what you need to conduct your research. So that tends to be the easiest piece to figure out. The second part is they also know that there is usually, depending on the branch, there's usually a 7% fixed fee. Sometimes it's as low as 5%. So you'll end up using the 7%. And then finally, what's left becomes what are your indirect costs. So what are you going to use to pay all of those things that are not direct? In other situations, I see companies propose without a fixed fee, which I always recommend against, because the fixed fee is your most flexible general purpose money you're going to have on your award. And the beauty of the SBIR program is that they pay you a profit, which is what fixed fee is. So you're allowed to make a profit of a certain percentage. You're allowed to do what you want with that profit. So very, very flexible. The next part that companies will call the plug, they'll put in a really low indirect cost rate. And the purpose of this is because they have to make the math work. If I know 7% is my fee, if I know my direct costs are a certain dollar amount, then by default, if I'm trying to shoot for a certain overall total, the rest must be indirect costs. And what we say is you want to know what your indirect costs are. You want to know whether or not you're going to rent space. Again, not the most common in a phase one environment, but in some cases you might need special lab space. It all depends on what type of research you're doing. You're going to have things like payroll taxes. You're going to have professional services. I don't recommend having benefits at this point if these are your first phase one applications and these are your first time awardees. So your indirect costs are something you want to know what they really are in detail before you put your proposal together. Now, in your proposal, they're nothing more than a percentage. But in order for you to know that percentage is correct meaning that it's a meaningful number, then you're going to want to understand what those indirect costs really are. And the reason for this is that you, as the manager of your business, as the executive of your business, you would need to make some decisions. So decisions would be, if I'm over the dollar amount, which is what tends to be the case, if I'm over the amount of money I'm allowed to request, where do I take it from? How do I manage that money? So do I manage my indirect costs differently? Do I manage my direct costs differently? Do I manage the way I do the research differently? So you're making all of those decisions really in the beginning of this process of putting your proposal together. And it's a good time to make those decisions because it helps you with some of the writing of the proposal and it helps you with the budget justification. So this is more than just let's see what the numbers are and figure it out later once we get the award. You're giving it some intentional thought. And that tends to be the best way to look at these things. So as you're going through the phase one award process, there's no surprises. You're not trying to figure out, okay, well, now I have to re-justify this, and now my indirect costs don't make any sense. And then you talk to outside professionals, and they say you don't have enough money in your indirect costs. So there goes your fixed fee, but then maybe you didn't ask for a fixed fee. So if you don't have that, then you don't have the flexibility. And if the grant doesn't sustain itself as far as the total cost, you're now looking at external money. You've got to find other sources of money to be able to deliver the cost of your business in order to deliver this award. So we do the same thing as others. We look at reverse engineering the budget. So you take your total dollar amount you're allowed, you divide it by 1.07, assuming 7% is the fixed fee part of it. You understand what your indirect costs are, and you actually compute those, that they make sense, and then what's left over becomes your direct costs, and you break that down by the various direct cost categories. You look at this, you see if it makes sense, and then you start making your adjustments accordingly. So that's where the reverse engineering piece comes in. What you'll see in other presentations is that you'll be advised to take safe harbor rates to the extent that those exist. So those are rates you don't have to negotiate with the government. There's no such thing for Department of Defense, Homeland Security. Those are agencies you'll have to actually request a specific rate. There's no default. But NSF, NIH, they tend to have these safe harbor rates. I always say understand what's real. what's really the real part of what you're trying to do as a business. If you have external resources, you have investors, you have friends and family, you have yourself, then those are areas where you might be willing to absorb a little more indirect costs. The grant may not be able to pay for it, but your company can pay for it. So your business side can pay for it. So that's the general formula that we're going to follow for this morning. Before I advance, are there any questions based on that?
You mentioned that you don't like to include benefits in a phase one. And in my experience, you want to start those benefits because you want to establish an overhead rate that makes sense that you can carry forward through the phase two. Do you have any thoughts on that?
I do. Thank you for the question. So if you think about benefits typically are for employees that are full-time employees, or whatever is defined as full-time based on your company's policies. The budget for a phase one will rarely even sustain one person, let alone more than one. So typically benefits don't apply, and it's not a real good use of money. If you're bringing part-timers in, they might be getting their benefits from elsewhere. Paid time off, things like that are all things that would eat into your budget, may not be necessary. Your phase one is not going to determine what your phase two looks like. So we have seen phase ones that come in very basic, might have 2 people on direct labor, a couple consultants, a little bit of travel. They're picking up some indirects and their fee. They have minimal benefits. And then when they go to phase two, they're bringing in health insurance, dental, a full paid time off policy. They might be bringing a 401k match, profit sharing. So all those pieces kick in. Phase one, really go for what you need. I wouldn't look at phase one, except for maybe your accounting system. I wouldn't look at phase one the way your cost structure is as a determinant of what your phase two overhead and G&A structures are going to be. So one does not tie into the other. The government is aware of the fact, and it's all based on our experience. The government's aware of the fact that when you go to phase two, you're a much more complex organization. You're going to have 3 or 4 full-timers. Things just get much more complicated, more robust, and just bigger. You're going to have rent. You might need some lab space. So it just starts to change dramatically. And they're aware of that. So I wouldn't make that the reason why you have benefits. Good question. Thank you. Anybody else? Okay. So moving on. So fixed fee. You'll see some of these get challenged from time to time. It's very rare. But fixed fees, 7% seems to be the norm. That's what people seem to accept. There's typically a requirement of some sort to justify what that 7%, like why 7%. And so you may get that question once in a while, and that'll happen in negotiations, but you should be good to go on the 7% part. When I see the range varying on the fixed fee part, it's a 5 to 7% range. I've never seen lower than 5 unless you put it in yourself. 5% I tend to see in the DARPA space. And outside of DARPA, I normally see 7%. So you're a new company, you're going for a 7% rate, you're looking at, you're probably comparing it to some commercial type of practice. My recommendation would be to go for the 7% unless you're told otherwise. And you shouldn't go lower than that, again, unless you're told otherwise. Because that profit, and you'll hear this from people in the field, that profit can be used for anything such as patent costs. And that's usually one of the big areas that companies don't have enough funding for. Trust me, that's not going to be enough to cover your patent costs, but at least it gives you a step in getting the patent process started. But it's not just about patents, about other types of unallowable costs that the company cannot recover from the government, but they want to have some type of cash flow in order to cover that. So typically, go for the 7, don't go for 0. I've seen 0s, I've seen 1s, I've seen 2s, and of course, our worst situation is when we see when we see companies that have no fixed fee, so no profit built in, and they have a minimal indirect cost, that usually means you're going to have problems running your phase one. So that's always going to be that challenge. Your goal should be that I'm going to run this project, this research project, within the funds I have from the government, and you want to manage that accordingly during the proposal process. So fixed fee, very basic part of it, should be the first step of what you're looking for, most flexible money. Your next part is the indirect cost reimbursement. Now, most of you, if you're doing things with defense, you're going to get most likely fixed price contracts. If you're doing things with NSF, it'll be a fixed price. If you're doing anything with NIH, it's going to be a reimbursable, so it'll be a little different. You have to incur costs in order to get reimbursed. But your indirect cost structure, what you're going to find is that in the application process, you will see a whole bunch of information, a lot of information that the government's looking for. So they're going to say, what is your fringe rate? What is your overhead? What is your material handling? What is your general and administration expenses? What is your facilities and administration expenses? Not everything needs to be filled in. So not every field needs a response. So my recommendation, if you're working in the defense space, is to have an overhead and G&A rate. That tends to be what they're used to the most. All the clients that we work with in defense are aware of that format. That is what tends to drive their rate proposals, rate projections, rate reporting. So go into it with that structure, and then it makes it a lot easier once you get the proposal that you're already in sync as you advance to a phase two. If you're working with NIH, you'll have more of a fringe and F&A rate, F&A being the same as overhead and G&A combined. And if you're in NSF, you can have they may have a fringe rate, they may have an indirect cost rate. I recommend not using the fringe rate, but if you use the safe rate, put the safe rate under the facilities administration rate because it gives you the best flexibility. So, but again, not every field needs a response. If you're being asked to fill in all these different types of rates, don't necessarily use them. Use overhead and G&A if you're doing a Department of Defense proposal, because it's just going to make everything easier going forward. It's also a good way to manage your business. And if you go commercial, overhead and G&A tends to be more of the norm. So this is your longer term strategy. You might as well start it that way right from the beginning. Make sure it makes sense. So this being your indirect costs. So making sure that I have indirect labor. So I'm managing my business. That's indirect labor. That needs to show up as part of your indirect costs, not direct. I'm meeting with my accountant. I'm talking to my law firm. That's all administration time. That's indirect labor. You want to always have an understanding that of your 100% labor, some of it's going to be indirect, some of it's going to be direct. It's never 100% direct. So always keep that in the back of your mind. Benefits, you're really, if you don't have benefits, at a minimum, you're going to have workers' comp. At a minimum, you're going to have employer payroll tax expense. You may not have anything else. Your facilities could be, you're renting some space, people are working from home, whatever space you're using, these are the big drivers. And then in the phase one, your professional fees, so accounting and tax and legal fees that come up. Make sure all of these things make sense. You're always going to shortchange this. It's not one of these areas where your companies will normally overestimate their indirect costs. They usually underestimate it. So it's very rare that we see companies come up and say that, 50% of my time is indirect labor, 50% is direct. It's usually the 100-0, and then the indirect rate they requested might be insufficient. So they're skewing their budget in an area that makes it a little more difficult to manage the business. So indirect costs, just be as real as you possibly can. You can change these things, obviously, when you start to go into negotiations. But going in, you want to understand what your real picture is at that point in time. Any questions on indirect costs? And if you have a question, I muted everybody, so you can unmute yourself if you have a question.
Can you hear me? I've got a quick one.
Yep.
So as far as projects go, sometimes commercial companies will have a fixed price per job. You know, to say that when you get a a quote for something, you know what that's going to be. And so when it comes down to labor is really kind of a wage, you know, the cost that it's going to be. So there's not a real fixed cost. How do I anticipate that with a law firm and, you know, accounting, tax work, you know, all that kind of thing? Is there any?
Good question. You're going to end up projecting or estimating some of these things. So for the non-patent side, the patent cost not being allowable in most cases, you're going to allow a certain dollar amount for what does it take to recruit an employee. If I need to bring someone into the U.S. and we need to have a visa of some sort, what does that cost? What does it cost to prepare a consulting agreement if I don't do that myself? What does it cost? If you're organizing the company, that wouldn't be allowable. But some of these things, you want to know what the specific tasks are that you would use legal for. Accounting is going to be easy. Accounting is there's a lot of predictability with companies that are in this space to understand what those fees could look like. And then you're not going to get much more into those professional fees on the indirect side. And now you start to get into the consulting part that might be direct, or you get into the subcontractor, which might be direct. So some of this is going to be estimations. But what you want to know is you want to know what the tasks are. I'm talking major, not in the minutia. The tasks are of what these are going to be, and then at that point you're doing an estimate. Sometimes you might be asking a firm, but I think in the phase one I wouldn't worry about it. It's not going to be that big of a number. Phase two obviously becomes a much bigger deal since you would most likely be in a CPFF, a cost plus fixed fee setting. But this proposal that you're working on would stand on its own. And you may, if you're a commercial company that's already doing some type of commercial work, you're going to leverage some of that knowledge into doing this proposal, but you're probably going to use the indirect rates that your commercial company is already using. So, for example, you would compute an overhead, compute a G&A rate when you take this proposal as if it was another project in your existing company, if this was an existing company, and then you would compute those rates, and you can actually use those rates for your proposal. At least you have something as an ongoing business that you can leverage too. So you have some flexibility there. These things are not necessarily that specific on the indirect side. You want this good understanding of what's real, but it's not going to be as well polished as the direct side is. The government will focus intensely on the direct side because they want to know what expertise they're getting. What is the contribution of your labor to this concept, whatever it is that's being worked on. And that's really where they get into the weeds on it. On the indirect part, they'll do that when they start negotiating. That all depends on what type of indirect rate you're looking for. Thank you. Someone else have a question?
George, it's Charles calling. Can you hear me?
Yes, I can, Charles.
I'm sorry, I joined in late, so I didn't see. I understand overheads. What's G&A?
G&A is the cost of running the business. So overhead, your cost of managing your direct activities. G&A is the cost of running the business as a business. So it's usually financial. So you'll have your accounting, HR, strategy.
What is G&A?
General and administration.
Oh, got you. Thanks. That makes more sense. Okay. And then my other question is, you had indirect labor and professional fees.
Mm-hmm.
Indirect labor, is that a consultant?
No, labor. Anytime you see labor, when I talk about it in this presentation, it's going to be W-2 employees or members of LLCs. So somebody who gets a K-1 that's a member of an LLC or W-2. It's not.
What's the difference? What's the difference between an indirect labor person and an employee of the company?
Same thing.
Oh, they're the same thing.
Direct labor is an employee of the company.
So does that mean that that's a direct cost?
No. It's indirect. It's managing the indirect side of the business. So the employee is split up between a direct. There's a portion of his or her time that's used as direct, and then a portion of their time that's being used as indirect. So this part here is the portion of the time that's indirect. So for example, if you were on the clock right now and I was training you on how to use your accounting system, mm-hmm. that would be your wages. That portion would be allocated to indirect labor and be part of your G&A calculation, and then the rest of your time may be direct if you're working physically on your project.
Oh, so if I have 3 employees and myself working on the project,
Yep.
we would effectively be in both categories.
Yes, that's right. Yep.
Okay.
And if your company has paid time off, for example, you have PTO or vacation sick holiday, you would also be broken out into that category too, as that's a fringe category, part of your overhead. But you would be broken out into that too. Yep. There's like 7 or 8 categories that each person can be broken out into.
I see. So it doesn't necessarily mean somebody outside the company. Can all be within the company.
Yep.
Just split up into different categories.
That's correct.
Okay. Yep.
Right. So moving on to direct costs. So direct costs, and if you have seen the budget templates that your respective branch or agency provides you, some of this is going to look very similar. And I'm just going to give you, again, some of the best practices, some of the things that we see, some of the challenges that come up with these. So direct labor is really a very, very important part, heavily focused on, driven by hourly rates that can be supported based on either people are already employed with the company and making this money, or they're going to be employed with the company and they have a certain skill set, qualifications, educational background, experience, demand. Those types of areas are going to determine the reasonableness of what you put in the proposal for what is the hourly rate for the employee that you're bringing on board. So as I said earlier, you're going to see that the employee's time is going to be split between direct and indirect. And you're going to have a PI plus other employees who are working on this, that their total number of hours out of a 2,080-hour work year, which is 52 weeks times 40 hours a week, what portion of that, one, what are they working for total hours for your company? And then two, of the total hours they're working for your company, what are the direct hours? So if you have a part-time person and you have no paid time off type of policy because they're part-time, then that individual could technically be 100%. All those hours could be direct. However, when you start pulling the individuals into meetings about the company, it could be a holiday party, it could be we're moving things around the lab, whatever it is, you start to get indirect, then you're going to see a portion of those individuals become indirect. Now, at the time you do your budget proposal, you're thinking that you're not going to have a lot of those activities, and that's okay. There could be some movement on these as you start to hit reality. But again, you want to be real at the time that you go and do the proposal. And you're going to hear me say this real thing all the time because it helps you understand your business and what types of decisions that you'll need to make. So hourly rate based on some type of support coming from usually third parties based on background, experience, education, so forth. And then the total hours based on the work that that these direct labor individuals are going to be doing. And that becomes your direct labor component of your direct cost. And this is how you would justify. You would justify their pay by saying that I looked at the salary.com, our university has a wage base, whatever it is for criteria, you would need to come up with what that criteria was that determined the hourly rate. So the question I get a lot is, well, I have no idea what that is. And then my answer always is, when you put your proposal together, I'm assuming it was blank, and the number came from somewhere. What did you use to come up with that number? And then the next question would be, well, is that a reasonable approach to doing what was done in the proposal? And if not, you need to find some other documentation that helps provide what is a reasonable salary or hourly rate in this case. So this is one of the tougher parts of the proposal. This is also one of the most scrutinized. So number one is direct labor. Number two is direct subcontractors. These are the two most heavily looked at pieces because they're the real nuts and bolts of the human interaction that's coming on board in this project. This is the expertise that's coming in to deliver on the scope of whatever your proposal is going to be about. So you definitely want to spend time on this, and you want to spend time on this. You want to be careful here. Give you some examples of things that come up. So company A pays an employee, let's say $100,000 a year. Divide that by 2,080 hours. It comes out to be roughly $2,000. So $50 an hour. Keep it simple. what happens is you do your budget and you say, okay, I'm over the dollar amount. So rather than me making $50 an hour, I'm going to make $40 an hour. So I'll pay myself 40 on direct work. And then my indirect work, I'll pay myself 50. There's no such thing. So it's always going to be based on what is your gross pay being physically paid to you through the company, divided by the number of hours during that pay period, is an effective hourly rate, and then that gets multiplied by what your level of effort was. So there's no multiple rates that go on in a direct labor calculation. This is what you're paid, and that dollar amount is what gets used for your calculation. So hold on a second, get through this chat. All right, so the question is, what happens when things change? So these are estimated numbers, and if we end up with a change, is proof required afterwards? That depends on the agency. So you're going to have a quick negotiation before you get your Phase I award, and depending on the agency, anything defense related, once you're done with your Phase I negotiation, you're done. Other agencies may ask you for some additional supporting documentation, but everything is known to be an estimate. It's just meant to be a really good estimate. So you do have flexibility. I hope that answers the question in the chat. The next important part you're going to worry about here is direct subcontractors. And subcontractors have two components. There's what the subcontractor cost is, and these are usually universities. And then there's an indirect rate. And universities are nonprofits, so there's no profit involved. So the subcontractor is going to give you total cost, and the subcontractor is going to give you their indirect rate, which is usually negotiated. And you're going to have a copy of their indirect rate agreement if you use subcontractors. You add those two numbers together, that becomes part of your budget, and then your justification includes who is the subcontract agency, what work are they doing that's important to your scope, and then how did you arrive at the numbers? They would have given you a quote, they would have given you your rate agreement, and then you bring those two numbers together, and that becomes part of your proposal. Your direct materials are vendor by vendor. So as you're putting your proposal together, you want to have a really good sense that if I need these types of supplies and materials, I'm going to go to Fisher Scientific or MasterCard, whatever it is, and I'm going to identify the vendor, identify what the component parts that I need, and then I'm going to have some type of quote. And you always want to provide some type of evidence that you're giving the government the best price. So you might be looking at 2 or 3 vendors that sell the same thing, and then you make your determination of what's needed. And again, you want all these things ready to go in your proposal. On the next slide, direct consultants. Direct consultants this is a tricky area because you want to make sure the scope is clear and it's connected so that there's that part of it. There's the expertise of these individuals. Direct consultants are not employees. These are what are called 1099 independent contractors. They have their own consulting businesses. They're providing you with consulting services. And now the question is, how do you come up with their hourly rate? And consultants generally will add some indirect. So if they're working out of their own office, they might pay themselves $50 an hour, and they double it and give themselves $100 an hour because their indirect rates are, let's say, 100%. And then you are looking at those costs and making sure those costs are reasonable for the type of work that's being done. So loaded rates here in the presentation means that your consultant added overhead. Now, if your consultant is working at your location, they have no overhead. If they're working at their own location, they have overhead. So these are things that are a little tricky when you get involved in these, but you want to make sure that the hourly rates are reasonable, with the understanding that consultants are adding some cost to their hourly rate. So give you an example, an employee, if you have an employee, you're paying them payroll, and you might be paying them fringe benefits, and then they're working in your space. So therefore, they're getting fringe, they're getting overhead. Consultants do the same thing. They're paying their own payroll taxes, sometimes, usually times 2. Then they have their own overhead to the extent that they have their own space, and they might be passing that on to you. So you're looking at reasonableness of the hourly rate, the expertise, what is the scope, and then your next challenge is how many hours do you need? Do I need 100 hours, 50 hours, 10 hours, whatever it is? The consultant's usually going to drive this. If you get a quote, try to get quotes whenever possible. And at that point, you're checking it for reasonableness. You're always looking for reasonableness on these things. Because if people are overestimating what their costs are, I can bet that they're going to grow into that cost. Your goal is to get costs as real as possible to make sure that your company has the amount of money that it needs to carry out the scope of the direct project, cover indirect costs, and have a little bit of profit left over to help with any type of contingency that you may not see. Direct equipment, another area that's looked at closely. If the government technically owns equipment, there might be certain dollar thresholds that kick in. If you want to get a quote, you want to make sure that it's part of something that the government wants. They own it in the end. It's government funded, so you have requirements of taking care of that equipment. How can you use that equipment? How do you dispose of that equipment? There's very, very specific standards on what you do with that. So if there's equipment needed in your proposal, then you're going to have a little more justification there as far as the quote and the need for it being general purpose. Specific purpose. If you're looking at general purpose, like companies will try to put in their proposal, well, I went and bought 4 laptops, so I want the grant to pay for that. Well, those are things you don't want to put into your direct budget because they're general purpose. You want to put in your indirect. So to give you an example, technically, the government, because they own certain things and it depends on their own dollar threshold, that if you were to use something that the government specifically paid for non-government purposes, you owe that portion of the use back to the government. So I say, why bring that complexity into your company? Factor that in under computer supplies and your overhead rate, and that way there it's taken care of on the indirect cost side, and now you can use that equipment, those computers for anything you want to do. That's for the general business purpose versus specific direct purpose. So you want to be careful on the direct equipment side. Direct travel, normally your solicitation will mention things like required travel, we must have a kickoff meeting, whatever it is. So you're going to have that in your budget. And then the other part might be that you need to go visit your subcontractors. They're at a different location. So you want to factor that in too. The most important thing here, you would have some detail attached to your budget justification, but the important piece is per diem. Watching out that whatever you're putting in for your cost is that you're staying within the federal travel regulation limitations, their per diem rates. So there would be hotel, meals, incidentals, and then on airfare, car rental, those types of things, you're making sure the government's getting the best price. So you're traveling economy, you're getting an economy car, those types of things. You're not flying first class. So those are the areas to note that on the budget justification, and then rolling that up into your proposal. And then other direct costs are just things that aren't covered elsewhere. This is where we see a lot of mistakes and also opportunities. So, for example, yes, go ahead.
This is Charles again. I'm sorry.
Yep.
When you're talking about travel, I was under the impression that in a phase 1, all of that should be at a minimum.
That's correct.
So really this does kick in more in the phase 2.
No, and well, if you're using, in a phase 1, if you're using a subcontractor, and because you have an obligation, you have to monitor your subcontractor, and there might be a kickoff visit at the sub who's not down the street from you, there's possibilities that might kick in. That's why I throw it in there in phase 1. Okay, good. If it's not a subcontractor, I don't see a whole lot of opportunity for it, but I agree with you. And then sometimes the agencies will just have the requirement of a kickoff meeting at their location. It might be in Washington. And then at that point, you have that built into it. And they would expect to see that. But you're right, though. It would be minimal. And then other direct costs would be, I have companies that put in office supplies or rent or things that are indirect in nature, throw them into direct costs. I don't recommend doing that because they usually get picked up in the negotiation, and it just makes your rate structure convoluted. So just make sure that's in the indirect. But there might be things that you might look at. I want to lease a small piece of equipment as opposed to buy the equipment. So can I put my lease rental charges in there? So put that under your other direct costs and build that into your budget and justify that. So that this is the opportunity for if you have some type of unique cost to throw in there, that you're letting the government know that, one, we need this for direct purposes, Two, that it would be focused on this award, and we're looking for recovery as a direct cost under this proposal. And you give the reason why, and again, how you justify the cost. So that is the direct cost section. Questions on direct? Chat's empty. All right. So now we bring it all together. So you're going to have, based on what agency, and if you work with DoD, what branch, you're going to have a proposal format that's normally online that you're going to complete, and you're going to do your justification based on that. You're only going to use what you need. So as I said earlier, you do not have to provide information for the sake of filling in a box because the box happened to be empty. Obviously, you can't leave direct labor empty because you have requirements of how much labor that the company must contribute to the project. So only use what you need. Keep it focused where you know what this project looks like and that the costs justify that. And keep it within the correct category. So sometimes I'll see consulting under subcontract. Sometimes I'll see subcontract under materials. So you want to be careful that things are in the right buckets in the direct cost budget. And that's what you're going to be filling out on the branch proposal format is a direct cost budget. The indirect side is really just percentages. And your percentage and base, what are you multiplying that percentage by? Provide adequate narrative. So this is your friend. So the narrative is a chance for you to explain what it is you're doing on the direct side, what you're using, why you're using it, because the government in effect is saying, yeah, I agree with that. I'm fine with that. So that puts everybody on the same page, takes away any of the anxiety. And I can't tell you, if I had to guess, I would say 25% of our budgets are out of sync by the time we see them. And that there's just a lot of anxiety in fixing these things. You get to do it. You just don't want it. It could be crazy. You could do a lot of changes in the budget, but you really want to understand what this project looks like. And there should be a lot of unforeseen things here, unless you're looking at meeting a certain result before you can get into step A to step B. There might be some unknowns in there. But outside of that, though, there's a lot of predictability in this, and being able to come up with some reasonable estimates, and then stay within the limitation. So if the solicitation says don't exceed this, don't exceed it. If it says that we're only paying an X% indirect rate, then that's what they're paying. So you want to stay within those, because those are what I call them disqualifiers. The things that you put in there that before you even get out of the gate, they've already said, well, you didn't meet what we wanted for a limitation. We're not even going to look at you. So be careful with that piece. The next part, reflect reality so you're ready to negotiate. So what ends up happening here is that we have companies that are now being told by the government, hey, we're ready to give you an award. We want to take a look at your budget. And then everything breaks loose at that point. And now they're looking at, well, I don't know, I got to pull this quote together. I'm not sure if that's the right type of part we're trying to use. Is that consultant, well, they're not available anymore. All this stuff starts to happen. So you want to be as real as you possibly can when you go and propose, because then after that, you're going to have less stuff to clean up when you're starting to go through negotiations. You want your negotiations to be very, very fast. Because once you're on the radar, they just want to get your contract done. The easier you can make it for them, the faster the process is going to go. And I can tell you, some companies will go on forever trying to find things. Others are really, really good at this. It all depends. But you as the proposer drives all of it. So being ready to go is always a good thing, and being real helps you get there. Act like you're getting the phase 2. So the reason I say this is, and this goes with the second one, act like a business. So when you're looking at your company, it's not just a matter of, let me get to phase 1, and if I get a phase 2, then I'll start doing this stuff. The reality is that if you look at the percentages, and it might be a 1 in 4, 1 in 5 chance of getting a phase 2, depending on what the agency is, what the program is, what the government interest is, you have 1 or 2 or 3 employees that are with you right now. You're already establishing your company culture. Phase 2 is definitely going to be different than the phase 1 as far as the amount of internal rigor that goes on in running like a business. So your accounting system, being able to just look like you're ready to go on your phase 2. So that way there, you are ready to go on your phase 2. Now, in our group here, we have, well, let's see, 11 participants. So let's say 3 or 4 of you, if you're following the normal data on going to a phase 2, 3 or 4 make it to a phase 2. This group, I'm going to say everyone's going to get to a phase 2. Let's just say 3 or 4 get to one. And at that point, you're now saying, well, now I have to get an accounting system in operation. Now I have to look at offer letters. Now I have to just do that stuff in the beginning, and the company just continues in the phase 2. You just continue, or you might get another phase 1. You might find some other work, and your company is now in the game of working with the government as one of their customers, as opposed to stopping, restarting every time something happens to your company. So, and that's just the best practice. Obviously, that is that's up to you as far as what you want to do with that. That's our recommendation. Because again, I'm basing this based on, I look at the companies that do very well in getting through the phase 2 process. It doesn't help you get to phase 2. It's getting through that phase 2 process. The ones that understand what their business is all about and what the next steps are the ones that tend to have the sustainability, the commercialization, the investment, the interest, just general interest. So I throw that in there just to help, just share that insight. And any questions? So about 15 minutes for questions. Did I get to my, oh, no, I don't have here? Next steps. Okay. So a recommended next step is that, before we go to questions, is that we schedule anybody who would like to go into a one-on-one. We are blocking off some time, I believe, to schedule one-on-ones with the hands-on putting your proposal together, the financial side of your proposal together. And that's going to be over the next few days. And then after that, just any other questions?
After listening to this financial thing, I'm on mute. I think I sent the thing to Heather. I made a mistake. That's how I wrote that out. Oh, really? Yeah.
George?
Yes.
Okay, so do you happen to have a few examples of different submissions that have been accepted in the past, just so that we can kind of see the format? Are people using Excel sheets? Or are they using, I don't know, Microsoft Money or books? Or
no, they follow the template that the agency gives them. I'm not sure. Let's see what this is going to open up.
So for example, this phase 1 asks for percentages.
Yep.
You know, so that's kind of a pretty generic approach. But what we would do is we would have something that's more detailed, so that if we did get accepted, we could share that with whoever is reviewing our application. I take it.
Yeah. So for example, what we do as part of, I'm opening up what a template looks like.
Okay, thank you.
As we're talking, but what we would do is we would help develop what are the percentages you should be using, where do they come from, right? So we have indirect cost templates that we use internally for rate formulation, and then you take those rates and drop them into your proposal. So let me just pull a proposal, and this is a blank template, so it's not any client information on here. At least I hope not. Let's see. Okay. Let's see here. Yeah, okay, these are actual numbers. Okay, I think this is good. All right, people can see, you can see this. So this is done, this is an Air Force format. And ignore these Boston addresses. These are my addresses when I'm on campus. So as you can see on this, they're going to provide just generic information. This is your top level summary, and they would normally have, some agencies have individual sheets. This one here actually covers everything in one. in one sheet. So you're going to have all of these names are made up, and you're going to have their name and their pay and everything else that's on here. And now what you're coming up is you're coming up with fringe rates, overhead rates, and so forth that are on this that are required. And what the indirect part does is we would help you with these percentages and what you need to put in here if you need anything at all. And then we have certain subcontractors, and we have what parts are, and you're listing all these individual pieces. So these are, then here's your G&A, here's your fee. So these are the pieces that are required on the proposal. So you're going to find this on your standard form that's provided by the agency as you're putting your proposal together. Behind that is usually a Word document that would include all of the narrative for each of those lines. So we need person one for X amount of hours to do X. Here is their background, and you most likely will have a CV attached for that individual to show that the background supports the pay, here's the number of hours, they're the PI, they're going to be involved in the business more than 50% of the time, et cetera, et cetera. So that would be the narrative component to this. We normally do not see the full proposal as it goes into a lot of technical aspects to that. What we do is we put together, we help you with the financial component, justify that financial component, compute what you think your indirect rates are right now, drop those percentages in, and then you're good to go on the financial side. Other questions? All right, Del or Dana, did you have anything you wanted to add?
Not at this time, George. I think we're. This is a lot of really great and valuable information.
Nothing to add. I guess just for the cohort, we'll be reaching out, or Del and I will be reaching out later today. But again, we just want to reiterate that you can use those micro grant funds to work with George and put this all together. So I would highly recommend that.
Thank you.
And that's all I've got.
Okay, so anything else comes up, I'll wait until I hear from you guys on this, and then we can start looking at what scheduling can look like for those of you who like to do the one-on-ones. The way the one-on-one would work is I would give you a template for you to populate on the indirect side based on what you know now. We would work on that together to fine-tune it, and then once we and you would want to put together a narrative. But I'll walk you through that process in the one-on-one, and then you'll have some quick homework on that. And then from there, we'll work together on trying to finalize what your indirects are going to be and populate those and make sure that the financial proposal makes sense. Any other?
Actually, George, I do have one question, and thank you very much. This is a great presentation. Do we get a copy of these slides?
I'll give you a copy of the slides, yeah.
And is it possible to have just a sentence below each bullet point, or do we get a recording of this session?
This is being recorded.
Oh, it is being recorded. Okay, that's good. Because I just came in a little bit late.
Okay, not a problem. Thank you.
Yeah, Charles. I was just going to pop in real quick and tell Charles and all the other cohorts it is being recorded, and then we have a backup of it for just in case as well. So no worries on any that for anyone.
All right. Well, thank you very much. Thank you for the opportunity to do this presentation. I'm looking forward to hearing from you.